Good afternoon, members. My name is Marcus James. I manage office and administrative services here at American Coatings Association. And if this is your first time to a webinar, welcome. And if you've attended many webinars, welcome back. A couple of administrative notes. We do have you in listen-only mode. We would like you to please enter your questions in the questions dialog box. We'll have a Q&A at the end. I'll read the questions aloud so everyone can hear them and have questions taken care of that way. There's also a survey at the end, and we would appreciate your feedback. And finally, as slides advance, we do hear from members saying that my slide is not at the same place that you are in the presentation. That's usually due to a bandwidth issue, but your presentation will catch up, and we will be distributing the slides after the webinar, and the recording will be available for you as well on paint.org. I'm going to hand this over to ACA's Vice President of Government Affairs, Heidi McAuliffe.
Thank you, Marcus. As always, we are thrilled to have ChemQuest and their team present to our members. Today's topic, harnessing the power of business cycle analysis. Probably nobody better to speak to this than ChemQuest and their team. So I'd like to introduce Edie Fox Abrams. She is ChemQuest Vice President of Business Development and Marketing. She has 25 years of experience in specialty chemicals and materials. She has been a respected member of the ChemQuest Executive Leadership Team since 2015. With market experience and insight that is valued by numerous industry publications, trade organizations, and institutions, she supports ChemQuest's client base to generate growth and profitability. Along with her today is Rich Gibson, who joined ChemQuest in 2021 as a director. Rich rose through the ranks in various capacities over more than a 30-year career at Milliken, most recently serving as Director of Corporate Strategy. His business strategy development expertise includes market segmentation, value and supply chain analysis, business intelligence, economics, voice of the market, due diligence, strategy deployment, risk management, and process improvement. Again, thank you, Rich and Edie and the rest of your team for being with us and presenting to our members today. I'm going to hand it over to you.
Thank you, Heidi. Terrific introduction. We appreciate it very much. Appreciate the opportunity to be here. And I can't have a better partner in explaining business cycle analysis than someone with Rich Gibson's experience. So today I'll just be the introducer, go over the first couple slides, turn the presentation aspects over to Rich, and then I'll join back in the conversation towards the end. Rich, if we could just move on to the next slide. I think we know why we're here, for harnessing the power of business cycle analysis. A brief review of our agenda today, starting with an introduction to ChemQuest, followed by discussion of what is business cycle analysis. We're going to then go into describing what Coatings TraQr is, because that is the ChemQuest tool that uses business cycle analysis and puts business cycle analysis into our clients' hands. We'll do a demo to see business cycle analysis in action, and then we'll have some Q&A. And let me just give you a brief mention of why we're even discussing this. So when we first introduced Coatings TraQr, which is our forecasting and database information for the coatings industry that we launched with the American Coating Association back in 2022, we started giving demos, walking people through our dashboard, and we discovered through these conversations that many people don't know what business cycle analysis is, or they're not well versed enough to put it to good use. We use business cycle analysis in all of our consulting projects, and we built it into Coatings TraQr so that our clients could have access to it. And again, so now realizing that people don't really understand it, we've decided to spend time educating them, explaining it, helping you see what it is and how you can use it to help make strategic decisions that are going to help you guys drive profitable growth. So if we could just go to the next slide, I'll just briefly discuss who ChemQuest is. For those who aren't familiar with us, we are strong partners of the American Coating Association, and our business is consulting, plain and simple, very specialized to the specialty chemicals industry. We help our clients navigate the intersection, as you see here, of strategy, markets, operations, and technology. We operate on 4 pillars: business strategy and transformation, external technology development through several different labs that we own, operational and manufacturing efficiencies. Maybe some of you have participated in the recent webinar series on operational and manufacturing that we've given over the past couple of months. And our last aspect of concentration is M&A advisory services. So all of our work is proprietary. Everything that we do is owned by our clients in terms of any IP that's developed, and all of our services are provided under NDA. We really do go beyond what many people think of as a consultant, because we step into the role of thought leaders, and that's what sets us apart within the industry. And we bring to each of our projects the opportunity to pick through more than 130 minds of experienced people, because everyone is senior personnel that have had a minimum of 25 years of experience working in the same markets that you are working in yourselves. So that's just a brief overview of ChemQuest, and I'd love to turn things over to Rich.
All right, great. Thank you, Edie. So what is business cycle analysis? Really, business cycle analysis is a vital aspect of economic analysis and guiding decisions for investors, businesses, and policymakers. We all sort of know what business cycles are. We know they exist. It's just that they're not easy to understand or to spot. It's hard to pick up on them. The challenge lies in predicting the changes in the business cycles before they occur. And the reason to do that is so that organizations can plan and act in sync with the changing cycle. A further challenge lies in identifying the leading indicators that are appropriate for your business. And then if you can set those up with the correct system for checking those leading indicators and tracking those, that's a key function. So just to kind of talk about traditional approaches to strategy and business intelligence, typically there are numerous steps and they don't provide the ability to effectively track changes in the business cycle. Most of us have an annual planning cycle where we're out gathering external data from multiple sources, running correlations and trying to find key indicators. Then we're going to evaluate that data and forecast strategically. Normally that's on an annual basis as well. So bringing in annual data and forecasting annually. We also do that from a quarterly standpoint. Again, it's various sources, bringing in the data, probably putting it into Excel, reviewing the key indicators for changes, and then updating, in a lot of cases, our annual forecast. Now, we do have some monthly data gathering as well. Again, various sources, but it's coming in quickly. Since there are many sources, we're a lot of times taking that data and just copying and pasting it into Word, PowerPoint, possibly adding some commentary and then packaging that as a PDF, which you might distribute to your internal teams, or maybe you send it out as a Word document. So that's monthly. A common theme with all of these is that it's time consuming, it's inefficient, the data is in disparate locations. You've got to go out and get it, bring it in and manipulate it. And so this manual approach hinders the ability to forecast changes and to even sometimes recognize them at the proper point. And then you lack the ability to make appropriate adjustments in your plans. So let's think about an enhanced approach, and let's try to understand business cycles and the phases therein. So in the chart that you see, we are showing a typical cycle. All economies, businesses, markets go through business cycles, but we've broken this down into 4 phases, A through D. 2 of these are below this horizontal dashed line you see on the screen, and 2 would be above them. And so how do we get this data? What we do is we think about the performance of the latest 12 months and we compare that to the year ago performance on a 12-month basis. We divide that out, and anything greater than a 1.0 is above the line, and anything below it is showing negative growth. So in the first phase that we will talk about is A. Let's call that advancing. That's when the indicator is down year on year, but the rate of decline is decreasing. It is moving or advancing up towards the horizontal break-even line. And when it crosses, it goes into the B phase, or the best phase. That's when the indicators compared to the prior year, and that rate of growth is up and it's increasing. So improvement and increasing, best part of the business cycle. But eventually that's going to peak, and it's going to still remain positive growth, but the rate of growth is decreasing. That's the C phase, and we call that a cautionary phase. And we'll talk later why we would say cautionary and some of the actions that maybe you would take. And we'll also talk about that in the advancing phase. But as you start coming down, say from a higher level, like a ratio of 1.5 to 1.3 to 1.2, 1.1, you're approaching the 1.0 line, the break-even line. And the issue is the closer you get, the more you're able to start planning. And as you see, you're getting closer. Eventually it's going to cross, and your growth compared to a year ago is going to be down. And when it crosses that line and hits into the D phase or depressionary, it's really probably recessionary, but the D matches up better with depressionary. It's easier for people to understand, to remember that. So when it does, that means you are worse than you were a year ago, and the rate of decline is increasing. Okay, so with that being said, 4 phases, A through D, 2 above the line, better growth, 2 below the line, negative growth. Okay, so let's talk about the ratios, which are meaningful metrics, and then how we're going to spot a phase change. So the 12/12 is what we just discussed. That's a 12-month moving total compared to the preceding 12-month moving total. But then let's introduce a 3/12 ratio. So the 3/12 is a quarterly ratio. It's the 3-month moving total compared to the year ago 3-month total. It's a little bit more erratic, it moves faster, and it leads the 12/12. And you're seeing changes in recent history that are very likely to point to reasons why the future will be different. It's very important to understand that 3/12. So then how do we spot a phase change? All right, so the first marker of a phase change is when the 12/12 crosses that 1.0 break-even line. It can cross it on the way down or on the way up. Either is a phase change. If you look on the chart, you see the first one, which is circled in green, and it says that's number 1. There we changed from A, which is below the line, low growth, but it's increasing towards that break-even line. And when it crosses it, we switch to B, which is the best phase of the cycle. But then you see another, the second circle, which is 2, and that's another marker where the 12/12 and the 3/12 cross. That could be crossing above or below, either way that it crosses. But in this case, we are changing from the B phase to the C phase. So now we're going to start getting cautionary. And the 3/12 in this case is the darker blue line. The 12/12 is the lighter blue line. And in this case, number 2, as you see where the 3/12 crosses over the 12/12, you see it continuing to run down, and the 12/12 follows it. Now, it hasn't happened yet, but when the 3/12 crosses the break-even line, if it continues down, the 12/12 will follow it at a lag. But then when it crosses the break-even line, then we will actually move from C to the D phase. That's one reason we're being cautious, because we want to really make sure that we know if we're going into the D phase, we need to have plans, and we need to be prepared to act. So in a nutshell, visibility into these cycle changes gives us an opportunity to think about and plan a change in strategy. All right, so how do we respond to the phase changes? So best practices that we have found multiple indicators that we're going to track for our business, and then we want to understand the actions that you should consider for various scenarios. So if two key indicators change phases in a similar fashion, both up, both down, then it's time to work on a plan. You need to have this plan ready so that if many more indicators, say 5, if 5 indicators all moved in one direction, then that's time to act. You want to have your plan in place so that when that happens, you're ready to go. You need to have alignment on your team on what you're going to do. And so here's some examples of actions if you moved from the D phase to the A phase. At that point, you're probably going to want to invest some money. You're going to want to increase inventories. You're going to want to increase marketing spend. It might be a time to hire top talent or to lock in long-term purchasing contracts while prices are low, and you're going to reap the benefit of that as you move up towards the, say, the break-even line and move into the best part of the business cycle. Okay, so a case in point, let's talk about some real-world examples. Here we have existing home sales, which is an indicator that's very important to a lot of us, right? Some of the various businesses, architectural coatings, coatings additives, floor coatings, etc. What we're looking at here is you can see phase changes, and actually 3 of them on this business cycle analysis chart. So the first one is when we changed from phase B to phase C back in August of 2021. That's the first one on the left. On the chart, you see big C up there with the circle. So again, same color lines, 3/12 is the dark blue and 12/12 is the light blue. So there we were in the B phase. They crossed, 3/12 and 12/12 crossed. We went into the C phase, and then as the 3/12 continued down, 12/12 followed it. When it hit the break-even line in April 22, it switched to the D phase, and then that ran there for several months. And then most recently, here, April of 2023, we actually moved from the D phase back into the A phase. So that's going to be ascending back up towards the break-even line. Now, without business cycle analysis, we probably wouldn't have known these phase changes had occurred for several months. And I think if we went back and thought about this, and we probably would realize that we really didn't know that these phase changes occurred. A lot of people did not know that existing home sales were trending down in this fashion. All right, so let's look at another example, and that's housing permits. Very similar. So housing permits are a great leading indicator for housing starts, which then we go to home sales. All right, so here in similar fashion, we moved from phase B to C in July of 21. Okay, at a very similar time frame as existing home sales. And then we moved from C to D in May of 2022. That's the second mark on the chart. And then the D continued on down, and then it switched over and they crossed in May of 2023, and we switched from the D phase to the A phase. And you can see that the 3/12 has crossed the horizontal line. So hopefully it continues on its path, and the 12/12 will follow it up, and it will cross and hit and move into B, hopefully in a few months down the way. So again, I think it's very important that we track multiple indicators with business cycle analysis, because that's going to enable your team to make better decisions, in advance of your competition. So let's just think about what is Coatings TraQr. So Coatings TraQr is a data platform and forecasting engine for the coatings market. And it enables subscribers to identify, analyze, and forecast market trends both from a global or regional standpoint in order to make stronger data-driven decisions that improve profitability. That could be for several functions throughout your company, and many of you may be able to use the tool. You likely would. It's going to improve your agility. You're going to know when to pivot. You're going to be ahead of things. You're going to be able to plan and be ready to act. It's a big time saver because we're bringing in coatings market data. We're bringing in economic data. We've got business cycle analysis. It's all in one location. You're not having to go out and pull data from all those disparate locations. Huge time saver. It's integrated. It works. It's a Microsoft tool, and so it's very much integrated with Excel or PowerPoint. Again, saving you time, and it's very user-friendly. It's smooth. It's easy to navigate. You can set it up and customize it just for what you want to see. You can just look at only your businesses, only the indicators you want, or if you want to expand that, open it up. In comparison, Coatings TraQr is very interactive. You can focus on those views that matter to you, as we said, versus an off-the-shelf from some other sort of data source. It's dynamic, it's comprehensive. We've got data for nearly 2,000 global indicators in almost every country in the world. It's not static, where a lot of the data that you may get from other sources may be. We have key data influencers, which is an artificially intelligence-generated tool that allows you to compare multiple indicators to one another and see that analysis. It gives you regression analysis. You can see how they plot, how they chart out. And you can do this over as long as we can pull the indicators from. Some of our indicators go back to the 1960s in the United States. So this can be very valuable, and you get the use of artificial intelligence to help you solve some of these issues. That's a very deep, set of analysis. And I think I would compare that to the shallowness of some of the other data that you get from other sources. And then you take all of this that we just talked about and you bring it to business cycle analysis, which is going to allow you to interpret trends, these market trends, indicators, trends, etc., in a very timely fashion to put your plans together and then be able to react faster than your competition. That's very different than some of the unconnected data points that we're going to get from other data sources. Okay, so why don't we take a look at business cycle analysis in action? I'm going to flip over to TraQr. We will take a look there. So I'm landing on the home page in TraQr, and I'll just say all of these buttons are live. We can jump to any of them. We also have a blue menu bar on the left. Again, we could jump to any of these that we wanted to. Let's jump to straight to business cycle analysis. And what I will do is, you probably recognize this. We are currently looking at existing home sales for single family in the United States. And we don't have obviously things marked on here, but I'll just point out that we are in cycle A. You can see that if you get used to looking at the chart, you could tell that we were in cycle A. This is the example we looked at earlier. We were below the line, but when the 3/12 and the 12/12 crossed, that moved us into the A phase. That happened in May of 2023. You can also see that on the trend on the table on the right. Sorry, April of 2023. We went from D to A. So you can see it in the table. We mark it here for you, and then you can see it here on the chart, actually April. So that's existing home sales. And as I said, you want to have multiple indicators. So we're just going to click through a few of those for architectural coatings. We'll keep it simple and keep it to architectural. So existing home sales, let's look at, I'm going to look at housing permits. And I'm going to look at, let's look at single family housing permits. So here again, we are in the A phase, And you can see we've had a few phase changes along the way. We had one here with 3/12, 12/12 crossed. We crossed the break-even line, and then we had another crossing of the 3/12 and 12/12. So running up, housing permits looks very good. Hopefully that continues. Hopefully it's promising. Let's look at, we just looked at existing home sales. Let's look at, let's look at new home sales. Home sales for single family. Again, this is a third indicator that is in the A phase. It's moving up. We had a crossover here in March of 2023. 3/12 has been running upwards, and it looks very likely that the 12/12 will cross that horizontal line, hopefully next month. That would take us into the B phase. Another very positive note. There's a lot of single family home sales that are happening right now, actually more so than existing home sales, because interest rates are so high and people have locked in on interest rates that are around 2.5%, 3% maybe, and they just don't want to leave their homes. They don't want to go take out a loan on a new home when the interest rate is going to be around 8%. So if people need a home, they're actually having to buy a new home. That's one of the things that's driving the growth here. All right, so let's look at another indicator. How about, permits for multifamily? We will look at 5+ units. It's the largest section in multifamily. Now here's one that's actually going in the wrong direction for us. So this one, as you can see, we have it, it's in the D phase, and it actually switched over here when it crossed. I think it was either, and it wasn't quite crossed over there. So in June, multifamily dropped into the D phase. But again, in hindsight, if you go back and look, we got on a downward trajectory back in 2022, when we had a crossing of the 3/12 and 12/12. So we should have been cautionary back at that point. And I really don't think that a lot of people were. I think there was a lot of interest in multifamily. But if you track these charts and you track them on a monthly basis, you would have known what was happening. Most people don't have that luxury. I think another good one to look at is probably residential construction. We'll look at maybe two more, and then we will come back. Residential construction. So because a lot of the construction that we have is based around single family homes and not necessarily multifamily, you're seeing that we actually moved down into the D phase, but we see some upward mobility here on the 3/12. It looks like we're close to having a crossing. So definitely multifamily is affecting us here, but maybe single family will kind of pull us forward and get us moving back towards the B phase, and we can open up some volume on architectural. So again, we want to look at several indicators. In interest of time, we won't go into everything right now, but this was several that we were able to look at. You would want to track all these. And again, another key point is, as you see these changing, if around 5 all turn in the same direction at one time, you've been planning, so that would be a time where you start to implement on the things that we talked about, like increasing inventories, increasing marketing spend, locking in long-term prices, etc. All right. So with that, I'm going to turn it over to Edie.
Hi again, everybody. I hope that was informative. Certainly it was a live real-time demo. Rich was logged right into the Coatings TraQr database and operating and showing us information that was that's current to this moment. So we just want to share a little bit of the feedback that we have from people who have started to use TraQr, started to use business cycle analysis. I don't need to read to you what you can see here on the screen. I would just like to comment that the users, the subscribers, range from the global multinational paint companies, brands that we would all recognize, down to some of the more innovative raw material suppliers, people who are starting to look to understand where their space may be in the coatings industry. And quite honestly, our subscribers are beyond the coatings industry as well, because as you can tell from, at least hopefully you got a sense from what Rich was saying, we have almost 2,000 indicators in the profile, and so many of these can be related to a wider swath of business aspects than just coatings. And that's the type of stuff we go into when we actually do a full demo of the TraQr tool with our clients or with our prospective clients. So anyway, BCA opens up a whole new world to us, providing insight we never had before. I mean, that's direct quote from our clients, and it's really been that type of feedback has been repetitive in a good way. So Rich, just perhaps go on to the next slide and we'll begin to wrap things up. Yep, just letting you know once again that business cycle analysis is a tool within Coatings TraQr that makes data work for you, enabling you to make stronger data-driven decisions. And we help you harness the power of visually seeing trends as reported by economic reporters, economic statistics. So this is not our interpretation. This is truly based on actual knowledge and then applying a little bit of interpretation to the information that we see. We think that by capitalizing on that deep understanding, it helps you navigate the intricacies of the market landscape, and it can help you maximize your opportunities to achieve goals. So thank you so much for your time today. We're going to actually probably not take the full hour unless we have a ton of questions, but happy to move into the Q&A part. Also happy to schedule demos that would be pertinent to your specific business. Rich and I invest our time one-on-one with clients, typically spending about 45 minutes to 1 hour reviewing the full TraQr database, and then spending particular time on this aspect, because honestly, business cycle analysis is the hidden gem within the TraQr tool itself. So thanks again.
Okay. All right, thanks, Edie. It's Marcus. And before we move to the Q&A, I wanted to mention that I have put a handout in the handout section. This is the ChemQuest Coatings TraQr, what is business cycle analysis? And Edie, I don't know if you want to say anything about that document before moving on to Q&A, or just let.
No, I'm happy to have anybody who wants to take a look at that, open it up, save it. It is basically a white paper that we created, again, just because we would spend our time doing these demos, and the concept of business cycle analysis was so, quite honestly, foreign or novel to the people who were participating, that it was helpful. We were asked time and time again if we could provide some background data on exactly how to use it. So in addition to the follow-up that you'll get of this recorded presentation, there's a white paper that you could certainly share with other colleagues in your company.
Okay, thanks, Edie. Moving into Q&A, if you have questions, you can go ahead and enter those in the questions dialog box, and we'll get to those. And the first one is, how would I determine the key indicators for my business?
I'll answer that one. So if you subscribe to TraQr, ChemQuest would suggest the indicators to start with. Then you would take those, and we talked about how interactive TraQr is with some of the tools. You would download those to Excel and then run correlations to your market. And ideally, you would run those with your sales data, and we would figure out which indicators correlated best. And we would triangulate those, and we would pick the best ones, the ones that you should track, the ones that you should run in business cycle analysis.
All right, thanks, Rich. How many indicators should I track?
I would try to track 6 to 8, and if you can get more than that, you know, if you could pull up to 10, if they correlated well enough, which we would see after we, you know, ran those correlations, I would shoot for 10, but 6 to 8 would be pretty good. Ideally, if you can find that there are 5 that are changing, moving in one direction, that's a very, very strong sign.
All right, thanks, Rich.
Hey, Rick, this is Heidi.
Yes.
That's a question that I had as well. 6 to 8 indicators seems like a lot. Is that kind of a best practice, you think? And does it vary depending upon who your market is?
So I think it is a best practice. It's good because really, if you find 2, that's time that you would start to put your plans together. Because sometimes it's going to take a bit of time to get everybody on the same page, get everyone convinced. But you put the plans together when you see 2. But really what you want to do before you actually act is have 5. So if you only had 5, you know, maybe 1 doesn't quite act as it's supposed to, as it has maybe historically. But if you have a larger number like 6 or 8, you have a better chance that if one of those is an oddball, that you're still going to get 5 that act in the proper way. So yes, it is a best practice. And to your second point, it may not always work. Sometimes if it were a niche market, there's a possibility that maybe you don't find 8. Maybe you only get 5 to 7. But we could work through that. We can help you with that.
And I think over time, what we've seen is that once people are using business cycle analysis, they really start to get a sense of which ones really matter the most to their markets. So those are the ones that you really end up focusing on. But it's nice to have a fairly broad set so that you can, as Rich said, it gives you better confidence about the decisions that you're making.
Thank you.
Great question. Thanks, Heidi.
All right, next one. How should I review the indicators via BCA?
I highly recommend that you look at those on a monthly basis, because as you can see from some of the examples that we went through today, sometimes that 3/12 starts to move. It moves in the direction like it's going to cross the 12/12, but possibly it will take a couple, 2 or 3 more months to cross. It just depends, and that's why you want to look at it on a monthly basis, because when you do get a phase change, you want to start planning. If you have a couple of those that act in unison, as we've talked about. But if you wait and you only look at it, say once a year, you're going to miss it. And you will probably even miss it if you only look at it quarterly.
And we make it easy. We help guide our clients to make it easy to follow them, because once you're active and you have a tracker subscription, we'll help you set bookmarks so that you come back to those same pages. So you'll log into your tracker subscription and be able to click right on a specific list, a down-drop list of bookmarks, and then go look at these as they change from month to month. You would even possibly just set a calendar reminder that on like the 5th of every month, you're going to go take a peek into TraQr and see where things stand.
And to Edie's point, once we have those indicators identified, we set those in BCA, we bookmark those. Once you come into TraQr and they're bookmarked, you can look at 6 to 8 indicators in just a few minutes. Especially if you're looking at those on a monthly basis, you're going to know what you saw last time. Did they truly change, or are they on track to change within the next month or two? You can make a quick evaluation.
All right. Next one. Some indicators in the chemical industry are quite unpredictable, such as chemical shortages and oil prices. Do you have indicators that predict the probability of changes in certain chemical prices?
We
Go ahead.
We follow chemical prices, certain more commodity style prices in TraQr. And so those are easy to view, not as part of business cycle analysis, but just as part of another feature that's within the TraQr dashboard. So whoever might be asking that question, they might want to inquire about taking a walk through the dashboard with Rich and I. We'd be happy to show them where that information lies.
I would also say that we do have some pricing information as indicators that we do track, and you can track those in BCA. We have pricings around specialty coatings and so forth. So we do have some pricing indicators. If there were specifics, if we could, if a chemical price happened to be in, say, Fred or one of our sources, then we should be able to put it in BCA. One of the reasons I hesitated a little bit is just because whenever you have something that was a little bit really oddball, like the most recent pandemic and supply chain shortages, sometimes prices can get out of whack and very much in a hurry. But that is an oddity. But if we get it in there and we have it, it's going to behave the same way with the 3/12 and a 12/12. So I think we would be able to see what's the most recent quarterly moving average compared to the year ago. How's that relating to the 12/12? And so we should be able to have some forecasting ability.
All right, we'll do one more. I don't have experience with BCA. Will ChemQuest offer support?
Yes. So two things. So all new subscribers get an onboarding session. And then if you're an ACA member, you're going to receive monthly follow-up sessions. And so everybody on the call should be an ACA member. So one onboarding session and then monthly follow-up sessions beyond that. And we can work you through all the details.
All right, so that's all we have for now. I think we'll go ahead and close out. Did you have anything, Heidi? Okay, let me tell you about a couple of upcoming webinars. November 14th, 2 p.m. This will be one of our state affairs webinars. This one will be Florida, Maine, and New York. And then on December the 5th, we'll have our last webinar for the year, and this will also be state affairs, covering the states of Kentucky, Massachusetts, and New Jersey. And then we'll have a bit of a break until our first webinar in 2024, which will be on January the 18th. This will be Global Initiatives and Policy Positions, a World Coatings Council update, and this will be presented by ACA staffers Heidi McAuliffe, Catherine Berry, Rhett Cash, and Riaz Zaman. And Heidi, did you want to say a few words about those state affairs meetings for folks that may have not attended any of those?
Yes, those state affairs meetings are an opportunity for our members to have a direct conversation with the state government affairs professionals that are working specifically for American Coatings Association. So there are boots on the ground in those states. So if you have any questions about what's going on in the legislature, politically, or even with the regulatory agencies, they are a great resource. I'd also like to put in a plug for our industry suppliers meeting, which is next week. It's not too late to sign up. We have a great agenda. First day talking about economic issues, and the second day focusing on sustainability issues. So there's a lot of things going on right now. So please feel free to join us at any one of those. And again, I would just like to extend our thanks to you, Edie and Rich, for a terrific presentation. And thank you, as always, for being a resource for our members on these types of issues. The series of webinars you've done for us this year has been really terrific.
Heidi, thank you so much for giving us the opportunity. I'd like to just put one last little plug in for something that both of us have been working on, which is going to come out in the new year, which is the March 15th as the release date of the new U.S. market analysis report, sponsored by, written for the ACA, written primarily by ChemQuest, with cooperation from you guys. And, you know, the last one was published March 1st of 2020. Just think about that for a second. That's my tagline on talking about how
Wow.
things change. So it became a great benchmark rather than a forecast, but it's what caused us to develop TraQr. And now we're excited to publish the next 5-year viewpoint coming up in March. So
Yeah, I know the industry will be waiting to see that, Edie. So thank you.
great.
All right. So I will distribute a PDF of the slides this afternoon, and the recording will be available for you on paint.org in the Member Center, probably by the end of the day tomorrow. We'll get that up, if not sooner. And we will see you on November 14th for the next webinar. All right, have a good afternoon, everyone.
Thanks,
Thank
guys.
you.
Thank you.